just like you asked. First, what does introduction mean here? Introduction here means basic idea or overview of what the international financial system is, how money and financial services move across countries, what tools and markets help in that, and how it affects the global economy. 1.4.1 Introduction to International Financial System. 1. What is the international financial system? It refers to all the rules, tools, markets, and institutions that help money move across countries. It includes rules and customs, financial instruments like bonds, shares, derivatives, payment facilities like SWIFT, Forex platforms, markets like currency markets, capital markets, organizations like IMF, World Bank. In simple words, it's the entire system that allows countries to trade, invest, and move money across borders smoothly. 2. Why has the system grown so much recently? Because of technology, online banking, faster transactions, more global trade, countries buying, selling from each other, fewer restrictions on money movement called capital flow liberalization. Example, you can now buy a product from Amazon USA while sitting in India and pay instantly. That's because of global financial integration. 3. What are the benefits of this system? Efficient money flow. Money goes to places where it can earn more returns. Helps economic growth. Both rich and poor countries grow together. Improves living standards. People's income, jobs, and facilities improve gradually. Example, a company in India can get investment from a US investor. This helps it grow, hire people, and boost the economy. 4. But are there risks also? Yes, the system is connected globally. So if one country has a crisis, it can spread quickly to others. Example, if a major US bank fails, it can affect stock markets in India, Europe, etc. within hours. This is called contagion in finance. 5. Quote by Alan Greenspan. These global financial markets can transmit mistakes very fast across the system. Meaning, if something goes wrong in one country, like bad loans, the news spreads fast and affects all other countries' financial systems too, faster than ever before. Key points to remember for exam. International financial system equals flow of money across countries. Grown due to tech, trade, and fewer barriers. Benefits: efficient money use, economic growth, better life. Risks: one crisis can spread quickly to other countries. Alan Greenspan equals warned about fast spread of financial problems. Real-world banking and interview connection. As a bank PO or manager, you'll deal with foreign exchange Forex, NRI remittances, and international investments. Understanding this system helps you handle those operations confidently. In SBI PO interviews or group discussions, you might be asked, how does a global crisis affect Indian banks? What is the role of RBI in managing foreign exchange? You can confidently explain using what you learned here. Short summary. The international financial system allows countries to move money, invest, and trade with each other. It has grown rapidly due to tech, trade, and deregulation. It helps economies grow but can also spread financial problems quickly. Mini motivation to keep going. You're doing something amazing by mastering concepts others fear. Keep learning step by step. You're not just preparing for exams, you're preparing to lead in banking and finance someday. Keep going. The future manager in you is smiling already. Send the next concept when. Before we start, what does evolution mean? Evolution means the step-by-step development or growth of something over time. So here, we're talking about how the international financial system has grown and changed from past to present. Hack 1.4.2, Evolution of International Financial System. 1. What is the international financial system made up of? It has three main parts. 1. International financial markets. 2. International financial institutions. 3. International financial instruments. Think of it like a cricket team. Markets are like players who do the action. Institutions are like the coach. They guide and support. Instruments are like the bat and ball, the tools to play. 2. Why did this system evolve? It evolved to support international trade between countries, make foreign investments easy, handle currency exchanges like INR to USD, stabilize economies after crises. Example, after World War II, countries wanted peace and strong trade, so they created institutions like IMF and World Bank to stabilize money systems. 3. Real-world relevance. As a future bank manager or PO, you'll handle foreign exchange forex transactions, international remittances, loans to exporters-importers. So knowing how this system works makes you a confident officer in global banking. 1.4.3 International Financial Markets. What are financial markets? A place where buyers and sellers trade money or financial products like stocks, bonds, or currencies. It helps businesses get funds and helps people invest. When a multinational company like Tata or Apple wants to invest in another country, it needs money. That's where these international financial markets come in. Types of international financial markets. 1. International money market. Deals with short-term money, less than 1 year, mainly used by central banks of different countries. Currencies traded like USD, Euro, Yen, and sometimes gold. Helps countries exchange currency quickly, called forex trading. Example, if RBI wants to buy US dollars to stabilize the rupee, it uses the international money market. 2. International capital market. Deals with long-term funds, more than 1 year, used by governments, corporations, public bodies. Instruments include government bonds, corporate shares, and debentures. Example, if SBI needs to raise 5,000 crores for 10 years, it might sell bonds in the international capital market. Key points to remember for exam. International financial system equals markets, institutions, plus instruments. It evolved to support trade, currency exchange, and global growth. 2 key markets. Money market equals short-term funds, forex. Capital market equals long-term funds, shares, bonds. Banking and interview relevance. In SBI IBPS PO interviews, or as a future officer, you might face, how does India manage foreign currency reserves? What is forex trading? What's the difference between money market and capital market? With this knowledge, you can explain confidently and impress the panel. Short summary. International financial system equals structure for global money movement. It grew due to need for global trade, investment, and currency stability. Money market equals short-term currency trade. Capital market equals long-term bonds and shares. Mini motivation for you. You're not just studying for marks, you're preparing to lead India's banking system someday. Stay focused, stay consistent, because managers aren't born, they're built through learning like this. International institutions. From Module 1, Introduction to Financial Management. First, what does international institutions mean? These are big global organizations created by many countries working together. Their goal is to support international trade, finance, and economic growth. They give money, advice, and support to countries in need, like a global support system for finance. NAShdar 1.4.4.1, International Monetary Fund, IMF. What is IMF? Simple definition. The International Monetary Fund, IMF, is a global financial institution that helps countries with money problems, especially with foreign currency and trade issues. It was created after World War II to help the world recover economically and maintain currency stability. History in simple words. Born in July 1944 at a meeting in Bretton Woods, USA. 45 countries came together to plan global economic cooperation. Officially formed on Dec 27, 1945, with 29 countries signing the agreement. Today, 190-plus countries are members. Main purpose of IMF, why it was created. To make sure that countries can trade easily, their currencies are stable, And if any country is in money trouble, IMF gives short-term help. Objectives of IMF explained with emojis and simple words. 1. Promote international cooperation. Help all countries work together in financial matters. 2. Expand international trade. Make it easier for countries to buy-sell from each other. 3. Stable currency rates. Avoid too many ups and downs in currency values like INR to USD. 4. Fix balance of payment problems. If a country is spending more than it earns, IMF helps manage that. 5. Support poor and developing nations. Give funds for development, growth, and reduce poverty. 6. Easy payment system between countries. Make it smooth for countries to pay each other for goods, services. 7. Convert currencies easily. Example, INR to USD or Euro, etc., without too much restriction. 8. Give emergency short-term loans. For countries in crisis, like war, natural disaster, or economic failure. 9. Promote growth and employment. Help countries to grow economically and create jobs. Simple bank-related example to understand IMF. Let's say a country is like a person, and it runs out of money to pay international bills, like import bills, debt. IMF is like a supportive financial friend who lends money, guides them on spending, and helps them become stable again. Just like a bank gives a loan with advice to improve credit score. As a bank PO or manager, you might have to understand how IMF policies affect interest rates, exchange rates, and even banking policies in India. TASHAR, key points to remember for exams and interviews. IMF equals Global Financial Helper, created in 1944 at Bretton Woods, offers loans, guidance, and monetary stability. Major goal: currency stability, trade help, balance of payment correction. India is a member and gets support when needed. How this helps you in SBI IBPS PO interviews and group discussions. Interviewers may ask, how does IMF help India? Or what happens if a country has a balance of payment crisis? In group discussions, IMF comes up when topics like global economy, currency crisis, or developing countries are discussed. As a future bank officer or manager, understanding IMF helps in foreign exchange operations, global economic policies, loan sanctioning involving international business clients. Summary: IMF is a global institution that helps countries handle their financial troubles. It was formed in 1944 and works for currency stability, global trade, and economic cooperation. Helps developing countries like India during economic crisis with loans and policy advice. It plays a major role in today's globalized economy. Little motivation for you. You're building the strong foundation for your dream banking career. Remember, every concept you learn is one step closer to becoming a confident bank officer, manager, or financial leader. Keep going. The future you are working for is already proud of your hard work today. Let me know when you're ready to go. Let's make this World Bank concept super easy, full of emojis, examples, key points, and link it to your dream of cracking bank PO exams and growing in the banking world. 1.4.2 From Chapter International Financial System, Module 1, Financial Management. First, what is World Bank? It's not like a regular bank where we open savings accounts. It's a global helper bank that gives loans, grants, and support to poor and developing countries so they can build roads, schools, hospitals, and improve life for people. Definition: simple words. The World Bank is an international financial organization that helps developing countries by giving them long-term loans, interest-free credits, and grants for projects like education, health, infrastructure, agriculture, etc. Its goal is to reduce poverty and boost global economic development. History and structure. Established in 1944, just like the IMF. HQ, Washington, D.C., USA. Owned by 187 countries. Staff, over 10,000 employees in 100-plus offices around the world. It is made up of two main institutions. 1, IBRD, International Bank for Reconstruction and Development helps middle-income and credit-worthy poor countries, gives loans for reconstruction, development, and reforms. 2. IDA, International Development Association, helps the poorest countries, gives interest-free loans, credits, and grants for basic development. Other helpful sister institutions. IFC, International Finance Corporation, supports private sector in developing countries. MIGA, Multilateral Investment Guarantee Agency, provides insurance to investors against risks. ACICID, International Center for Settlement of Investment Disputes, solves disputes between countries and investors. Objectives of World Bank in simple words with emojis. 1. Provide long-term capital for economic growth. Gives money for long-term development projects like building roads, hospitals, schools. 2. Rebuild war-affected countries. After World War II, many countries were destroyed. The World Bank helped them rebuild. This part is completed now. 3. Boost production and develop resources. Help countries become more self-reliant in food, energy, jobs, etc. 4. Balance trade and improve BOP, balance of payments. Help countries reduce import-export problems and balance their foreign currency flow. 5. Encourage foreign investment in member countries. Example, World Bank gives guarantee to investors so they feel safe to invest in developing countries. 6. Provide loans to small and big projects, right? Whether it's a small farmer needing irrigation or a government needing highways, World Bank supports both. 7. Ensure smooth shift from war to peace economy. From making weapons during war to making schools and jobs in peace, World Bank helped in this transition. Easy example, Bank PO aspirant friendly. Let's say India wants to improve railway infrastructure in rural areas, but doesn't have enough funds. The World Bank can step in and give a long-term loan at low interest. India uses the money to build better railways, which boosts trade, jobs, and growth. As a future Bank PO manager, you might deal with such project finance or loans tied to international organizations. This knowledge will set you apart in interviews. Hashchart key points to remember. Quick revision. World Bank International Development Helper. 2 parts. IBRD for middle-income countries and IDA for poorest countries. Also supports IFC, MIGA, ICID. Objective, poverty reduction, economic development, infrastructure, trade. Gives low-interest loans, grants, project support. How this helps an SBI IBPS PO interview, group discussions, and banking career. Questions like, how does the World Bank support India's growth? Can be asked in interviews. In group discussions, if the topic is role of international institutions in India's development, this content will help you shine. If you join as a Bank PO, you may work in areas like project finance, foreign funding, government schemes linked with World Bank like Swachh Bharat, PMGSY, etc. Hashtag bank-related real-life example. World Bank funded rural roads project in India. Result: better transport for farmers, quicker goods delivery, and stronger local economy. You, as a Bank PO, could be working in rural branches supporting such development loans or schemes. Summary, quick snapshot. World Bank helps developing countries with long-term loans and grants. Formed in 1944, includes IBRD and IDA. Also works with IFC, MyCCD. Focus: poverty reduction, infrastructure, health, education, agriculture. Very useful for interviews, exams, and real-world banking. Motivation to keep you moving forward. You're not just studying a subject, you're building the knowledge to lead the future of banking. Every single topic you master today is shaping your confidence for that SBI PO interview chair, or that manager role you'll soon rock. Keep your head high, energy up, and study with purpose. Success is banking on you. Let me know when you're ready to continue with the next topic. What does this heading mean? ADB equals a special bank made for helping Asian countries grow. Unlike the World Bank, which is global, ADB is more regional for Asia Pacific. It gives loans, advice, and support to Asian countries for development like roads, electricity, schools, etc. Let's learn step by step. Why ADB was created. Meaning simplified. In the past, global development banks like World Bank had one rule for all countries, but that didn't work well because every region has different problems. Asia's needs were different from Europe or America. So, countries felt the need for a bank that understands Asia's unique problems. Example, Europe needed rebuilding after World War, but Asia needed basic development like farming, roads, electricity. Birth of ADB. How ADB was formed. Let's go in steps. 1. In August 1963, the idea of ADB started. Countries started talking about it. 2. In April 1965, two big countries, USA and Japan, said, "We will each give $200 million to support this Asian bank." 3. By August 22, 1966, ADB was officially created, started actual working from December 1966. Membership of ADB. ADB is open to regional countries from Asia and Pacific, non-regional developed countries like USA, UK, etc., who provide funds. As of 2007, it had 67 member countries. Most are from Asia, but some are rich countries helping with money. Simple definition: Asian Development Bank. ADB is a regional development bank that supports Asian countries by giving loans, grants, and technical help to reduce poverty, build infrastructure, and improve economic growth. Real-life example: Bank PO aspirant style. Let's say Nepal wants to build solar power plants in villages, but it doesn't have enough funds. ADB steps in and gives a loan at low interest. Nepal builds the project, villagers get electricity, and life improves. If you become a bank BO and your branch gets funding from ADB projects like rural development, you may manage those loans or accounts. Key points to remember. Quick revision. ADB equals Bank for Asia's Development. Created officially in 1966, started working in December 1966. USA and Japan gave big support to start it. Focus: loans, advice, help for Asian countries. Membership: 67 countries, Asian plus developed. Works on infrastructure, education, power, poverty removal, etc. How it helps you in MBA plus Bank BO interview. In GD interview, if they ask, how are Asian countries supported in development, you can talk about ADB. As a future manager, you may work in loan appraisal for ADB-funded projects, government schemes in partnership with ADB, foreign funding departments in banks. Your knowledge of ADB will impress interviewers and boost your confidence. Summary, quick snapshot, point explanation. What? A development bank for Asia. Formed 1966. Supported by USA, Japan, and 65 others. Goal: poverty removal, growth, regional development. Works on roads, power, education, water, environment. Members: 67 countries. Helps in MBA exams, interviews, group discussions, banking job. You're doing what 95% of students avoid: learning with full clarity and purpose. Every topic you master today is building your road to that bank PO seat or manager post. Keep learning like a leader, because banks need minds like yours. Let's go to the next topic whenever you... SHAT 1.4.5 International Financial Instruments. What does this heading mean? Meaning in easy terms, these are tools, instruments, used by companies or governments to raise money, funds, from outside their country in international markets. Instead of borrowing just from Indian banks, companies can borrow from foreign investors, banks, or institutions using these special financial instruments. Why are they used? To get more money at better interest rates, to get funds in foreign currency, like USD, Euro, to grow business internationally. Real example: imagine a company like Tata Motors wants 1,000 crore to open a plant in Germany. Instead of just borrowing from Indian banks, they sell international bonds or Euro bonds and raise funds in euros from European investors. Now let's break each international financial instrument step by step. 1. Euro loans. These are loans taken from a foreign bank in a currency different from your own, like USD, Euro, etc. Interest rates are usually low, and they are helpful for big projects. Example: Infosys takes a euro loan from a London bank in dollars to expand in the US. Euro commercial papers, ECPs. Short-term debt papers, like IOUs, issued in international markets. Companies use them to borrow money for short time, like 6 months. Example, an Indian company needs working capital for 6 months. It issues an ECP in London and repays later with interest. 3. Floating rate instruments, notes. These are like bonds, but their interest keeps changing, floating based on market rate, like LIBOR, so the return is not fixed, but flexible. Example, if LIBOR is 4%, you get 4%. If LIBOR rises to 6%, your return increases too. Loan syndication? When many banks come together to give a big loan to one company, used for big projects where one bank alone can't give the full amount. Example, Reliance wants $500 million. 10 banks join hands and give it together. 5. Euro deposits. Money deposited in banks outside the home country, but in foreign currency. Not controlled by local rules, so they may offer better interest. Example, a person in India puts USD in a Swiss bank. That's a euro deposit. 6. International bonds. Bonds, loan papers, issued in a country, but for international investors, helps companies get long-term funds from abroad. Example, ONGC issues international bonds in Singapore for 10 years. 7. Eurobonds. A type of international bond, but issued outside the country of the currency. Denominated in a currency not native to the country where it's issued. Example, if an Indian company issues a bond in Japan in USD equals Euro bond. 8. American Depository Receipts, ADRs. These are shares of Indian companies traded in U.S. stock markets in USD. U.S. investors can invest in Indian companies without using Indian exchanges. Example, Infosys lists ADRs on NYSE. U.S. investors buy them in dollars. 9. Global Depository Receipts, GDRs. Same as ADRs, but they are listed in multiple countries. Helps companies get global investors. Example, Wipro issues GDRs in London, Frankfurt, and Hong Kong. Receipt generally refers to ADRs, GDRs, refers to financial receipts given to international investors for owning foreign company shares. So ADRs and GDRs fall under this. Hash, key points to remember. Instrument, use, Euro loans, long-term foreign loans, ECPs, short-term foreign debt, floating notes, interest changes with market, loan syndication. Multiple banks give one big loan, Euro deposits. Foreign currency deposits abroad, international bonds. Long-term loans from global investors, Euro bonds. Bonds in foreign currency issued outside home country, ADRs. Indian shares in U.S. market, Indian shares in global markets. Receipts, proof of foreign investment. Summary, quick snapshot. International financial instruments equals tools to raise money from abroad. They help companies expand, get cheap funds, and attract global investors. Shaq, how this helps an interview, Bank Bo. Interviewer, can you explain how Indian companies raise money globally? You talk about Euro bonds, ADRs, syndication, etc. As a bank PO or manager, you might handle corporate loans using these tools, syndicated loans, GDR, ADR linked accounts, foreign exchange services. Banks love officers who understand these tools. It shows you're ready for global banking operations. Short motivation. You're moving like a finance warrior, one topic at a time, with full fire. This hard work will pay off, whether it's SBI PO, MBA jobs, or even manager positions in top banks. Keep the momentum. You're not just learning, you're leading your future. Next concept. Ready? Let's crush it together.